Monday, June 20th, 2022, Monaco 64, home of alternative economics and contrarian views. So today we're going to look at why a sovereign debt crisis, in my opinion, is highly probable, and it will originate in Europe, of course, in the eurozone, in my opinion. And we're going to look at how the spotlight is going to be on central bankers this week. I think they're even more between a rock and a hard place, and things, of course, are not going to end up well. They're trying to buy time as they usually do. And before I start, I like to let those of you who are new to the channel, who might be wondering about acquiring some gold and silver, and many of my viewers have asked me in the past where to get gold and silver. Just wanted to say that I have a promo code with gold investments, and the promo code is Monaco64. Again, I also tell my new viewers that they should do their homework, try to get the best deal possible. But gold investments, they've been around for 40 years. It's a family-run business, very personal service. And yes, and they'll try to match any quote in the UK for gold and silver. On the other side of the coin, so to speak, I also have an affiliation with Glint, the Glint app. And what the Glint app does, or GlintPay, is it allows you to store your gold in Switzerland in a private vault in an allocated account. It might not be for some of you. Some of you will want to hold on to the physical gold and silver, but this is the next best thing, and it allows you as well to spend that gold with a MasterCard. I have a referral code there, Mario Glint 79. All the details for Glint and gold investments are below in the description of this video. So why do I think it's very probable that we're going to have a sovereign debt crisis? Well, because the sovereign debt crisis we had in Europe in 2011, 2012, nothing was solved to stop that crisis. Even though they did stop it, all they did is throw more debt into the system, which is the whole problem: too much debt, and an economy that's dominated by government spending. And that sovereign debt crisis, if Mario Draghi hadn't thrown everything at it, it would have spread not just to Europe, but to the US, to the banks. Everything would have imploded. And that's why he said we'll do whatever it takes. And up until last week, we were seeing that brewing again, that crisis. European yields, especially Italian, Greek, Irish, and Spanish and Portuguese, were rising like a rocket. And even UK yields were starting to rise. And why is that? Well, because now the situation is even worse than 2011-12. Back then, we didn't have the CPI rising as quickly. The inflationary pressures weren't there. We had less debt, even though we had a lot of debt back then. We've taken on even more debt, especially after 2020. As I said, government is crowding out the private sector. The EU is like a socialist behemoth with all these rules and regulations that do not encourage entrepreneurship and free markets. And to think that they can weather this is wishful thinking, in my opinion. And again, it will start, I think, in Italy and the PIIGS, so to speak, and spread throughout the Western world. And it's going to be very dangerous to have a lot of balances with banks, in my opinion. What we could get is Cyprus, but to the power of I don't know. It's very difficult to calculate, but it would be much bigger than Cyprus. And by that, I mean bail-ins. Your funds could be appropriated. They could be confiscated from the banks themselves to bail themselves out. And the insurance thresholds of like 100,000 for the eurozone for bank accounts, and let's say 85,000 for the UK or even the FDIC, in a systemic crisis like that, that could become meaningless. Yes. So what's made me think about this morning, the inevitability, the highly likely inevitability of a sovereign debt crisis. Well, it had to be this story here in the FT that I got this morning. It says, Europe does not face fresh sovereign debt crisis, says Eurogroup chief. I mean, whenever a politician or an official, government official says something like that, it's because it's going to happen. And this is a really good example of that. If everything was fine, why do you have to tell us that we're not going to face this crisis, right? So who is this guy? Well, he's the Irish finance minister, Pascal Donoghue. He says he insists bloc's economies are in completely different shape from a decade ago. I agree with him. They're in a lot worse shape than a decade ago. They're up to here in debt. They're up to here in government spending and meddling. And they have a lot worse inflation. They have a cost of living crisis. They're trying to destroy the European economies by imposing all kinds of stupid sanctions and limitations on trade with other countries. So yes, he's right, but it's not in great shape. So let's quickly go through this article, not the whole thing, but you get the idea. He thinks things are better now. I think this is a kiss of death for someone to say that. I could be wrong, but and I know that European sovereign debt yields in the last week have come off. The crisis has been kind of contained for now, but I think it's far from being over. I think this summer will be a hellish summer for the European bond markets. So he says the eurozone is well placed to ride out recent market volatility. He calls it volatility. And its economy will grow this year and next, the Eurogroup president said, denying that the currency union faces a crisis akin to that which struck a decade ago. Pascal Donoghue, who is Ireland's finance minister, as well as chief of the pan-Eurozone group of finance ministers, said current circumstances were completely different from the kind of crisis environment we were in when the bloc was gripped by a spiraling sovereign debt sell-off in the early 2010s. He says, Donoghue said the euro area now had stronger architecture and deeper foundations for our common currency. Sounds again like the King Canute theory of inflation or theory of finance. Just because you say so, it must be so, right? So what about the central bankers? I said they're going to be, the spotlight is going to be on them this week. Well, Christine Lagarde, the president of the ECB, she's going to be questioned today in Brussels in Parliament about what's going on, because the ECB wants to have its cake and also eat it. They're talking about hiking rates, unwinding the QE, but at the same time, they want to bail out the PIIGS, Portugal, Ireland, Italy, Greece, and Spain. And maybe the PIIGS will only be one eye this time, because Ireland actually as a country has, their debt has been lowered quite a bit relative to all the other countries. But everyone will be affected. So it'll be interesting to see how she navigates these questions, even though I don't really rate Euro or EU politicians in the parliament in Brussels that much to give her too many hardball questions. And if anything, they're gonna want her to guarantee more and more money printing probably. So on the other side of the pond in the US, Jay Powell, the chairman of the Federal Reserve, he will be testifying to lawmakers in the US House of Representatives Wednesday and Thursday. So the markets are going to be watching that and listening to his comments very closely. So with that, let's look at where the markets are this morning. It's 8:30 a.m. London time. I've checked the Japanese bond market. That seems to be quite tame. There's nothing really going on here. The 10-year yield is below 0.25. So let's look at where gold and silver are first. We got spot gold trading at 1841, is up about $1. The range has been 1846 to 1834. Spot silver is at 21.56, down about 9 cents. High has been 21.92, and the high has been 21.45. So how do I feel about the technical and the sentiment for gold and silver? Yes, it's still not great, the sentiment and the technicals. But again, I don't see a way out of a predicament that we're in economically, monetarily, and financially. And I still think gold and silver and hard assets are the place to be. I think patience is paramount. And at the end of the day, gold is still up 2 to 3% this year in dollars, and even more in other currencies. Someone might say, oh, you're cherry picking the dates, but in the year where stocks and bonds have been hammered so much, having some gold has been a good way basically to be short the stock market, because you can go in there now and buy a lot of companies a lot cheaper with the same amount of money you had in the beginning of the year. And I'm not telling you should do that. I'm just giving you an idea or an example of what's really happening, I would say. To the stock market, the Dow futures up just under 100 points at 29,970. The NASDAQ 100 futures up 70 points at 11,324. And the S&P 500 is up 15 points at 3687. The FTSE 100 index is up 39, just above 7,000 at 7,035. The Euro Stoxx 50 is up 10 points at 3444. To the currencies, sterling is virtually unchanged at 122.31. The euro is up 0.25% at 105.20. The dollar is down 0.1% versus the yen at 134.80. Dollar's down 0.25% versus the Swiss franc at 96.71. And the dollar's down 0.5% versus the yuan at 668. And the dollar is down slightly at 56.50 versus the Russian ruble. Aussie dollar is up 0.5% at 69.74. The dollar is down 0.2% versus the Canadian, just above 130. And the Kiwi dollar is up 0.5% at 63.41. To the general commodities, we've got WTI crude unchanged at 108.05. Brent crude is unchanged as well at 111.35. And high-grade copper is broken back below 4. It's down 1.3% at 3.97. And U.S. nat gas as well is down almost 2% this morning at 6.80. And to finish off, we'll look at the bond markets. The U.S. 10-year yield is unchanged at 3.23. The Italian 10-year yield is up 7 basis points at 3.75. Yes, last week, prior to the emergency meeting that they had, the ECB, I think that yield went up to almost 4.5%. And a couple of weeks ago, when I started looking at the Italian government bond market and warning people, that yield was at 3.4. So still relatively, or we're still quite a bit higher than we were a couple of weeks ago. And yes, it has come off since last week. But as I said, we need to really keep a close eye on these government bond markets because they're at the base of the whole financial architecture of the West and the world for that matter. So if you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And I wish you all a great start to the week. Take care. Bye.